Welcome everybody to the stream. Welcome to Monday Open. Obviously, massive couple of weeks here in the markets. Big times for crypto and massive times for the stocks across the board. So we saw a little bit of relief coming off the level last week, which was right on the zone that we expected it to start to bounce. And that's, I think, more of a defense of a few things. A defense of the puts, a defense of the stocks in general, which means that, of course, the 19 to 20% level, as we know, top to bottom, this creates bear markets. And this is a zone that a lot of people look at. And we got so close to technical bear, guys. Woo! Look at that. Ooh, that's tight. It doesn't get much closer than that. And that's why partially it's defended. The other thing is also, we talked about the idea that the market's moving in a bit of a wave. Now, obviously, there are theories out there, Elliott wave, and other theories that people use to figure out this. And they consider things like potential A, B, C, or they consider it as waves within waves, which is obviously your first one here, pull up, second, third, fourth, fifth. Yeah. So if you have something like that, wave within a wave, whatever else you want to call it, then it can also present. Now, you know that I'm not the biggest Elliott wave user. It's not so much that I don't think it works. I think it works occasionally. I just think that we get even more subjectivity to it. But when it overlaps with an already existing concept and everything's kind of screaming towards it, then yeah, why wouldn't you process that kind of thing? Gary says, boo, even Elliott wave. Yeah, well, it's there. It's there. And no matter how you want to look at it, now we potentially get this pull up. And it says, that kind of philosophy is obviously around, the kind of more speedy move here. So usually it's kind of like more like this, boom, 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 that kind of concept back up to this level. So how do we get this range, or how do we get this potential projection? Well, we use it based on the previous move here. And we'll do this on the Nasdaq in just a few moments, but that's how we kind of get that projection. We kind of say, well, there's a chance here that we actually get a bit of a recovery. That doesn't mean, though, the bears are not right and there's a further low later on this year during the midterm elections. I mean, I just saw in our Discord community, join the Discord community, by the way, if one of the mods could chuck the free link in, join it up if you haven't already. 3,400 is their prediction. Now, I never go with any of their predictions because when you think about it, they said that China was uninvestable. JP Morgan did. And now suddenly the bottom's in. And they've said it's now investable again only a few weeks later. They're making investment calls and they're changing their opinion all the time. And that's fine. I change my opinion regularly as well. But it doesn't mean that you should pay that much attention to some of the things that are sometimes being said. So let's talk about some of these key levels. I'll put in the big ones that I think are moving forward here for the S&P 500. We'll go over some key indicators here together today. We'll go into the Nasdaq. We'll go into some of your favorite stocks out there. I know what a lot of you guys like. And we'll do some crypto as well. We'll talk about that market. And in general, we'll basically cover off everything here into the Monday Open as best we can. If you can, smash that like button as well. It's not that hard. Just go find it somewhere around there, I think, and smash that. Don't hit the dislike, though, okay? Actually, I don't even know if that makes a difference, but don't do it anyway. If you do enjoy the content, it helps us out. Let's check out this S&P 500. We'll look at the futures in a second here, but let's have a look at the real market while it was opened. So in the private community, we mentioned this exact zone. So we mentioned that we thought that this was probably the most likely target for the market to get up into, and it was going to have some problems around here. Now, coming into today's market, we're actually trading around 4,030 again. So we're trading right on this resistance. And the reason this is a bit of a problem is a few things. There is technically a gap here in the real market between this zone. Obviously, gaps, they do exist, and we know there's one there. But will we have a bit of a pullback, maybe fill, and then movement forward? So a lot of people are starting to draw this. I'm sure they're going to go, oh, inverse head and shoulders, Tom, look at that. I'm looking for it to breach out here. And I think if you get a breach out here, the most prominent area for it to go into is around that 4150, 4160 zone. What's the chat think? What do you guys think? Do you reckon 4160 is the next area it goes towards? We need to remember when we zoom this out, 4160, 4150 was previously a huge level over here. That was back in Feb, back in March, and of course, March again. we then moved through. And if we load up a volume indicator, volume profile, so let's just quickly go US 500 here for a second. And we will see how the futures market's trading, so you can see it a little bit more clearly. Get rid of that for a second here. Put in a 4150. And what I want to do is I want to load up a volume profile with all of you guys. A few people ask me about this and how to use it and stuff. Oh, those so annoying, guys. I tell you what, TradingView, if you're watching, give me my premium back. Those guys, super annoying. You know what they do? Every 6 months, they make you send them an email to get the premium back for free. Because obviously they give it to me because I'm a partner. Like in terms of that, I have the little link somewhere in the description below. And they took it away from me on the weekend, so I can't even add volume profile. Well, that sucks. Anyway, that's all right, guys. We'll have that for the next stream. Well, what you'll see is if you load it up, what's going to happen here is you're going to have a zone that's going to show through. And there's a lot of touches to that area. A lot of orders are sitting around this same area. So around that 4150, 4160, lots of stuff. If you go and do it right now, you'll see it on the charts. And that would be the area. A few people are saying, can we break 4100 first? Well, yes. I mean, that, of course, yes, you're talking about other levels. But what I'm saying is it's more likely than not, once you breach a zone like this, you go into the next zone. So let's have a look at what it really means. Let's think about this on the smaller time frame. And I want to break it down here. We'll go 15-minute chart, okay? So let's break down the change of trend as we see it. So the markets come down. They make a new low. They rally up a little bit, make a new low, rally up a little bit, make a new low, rally a lot, and they hit this zone. And they just kind of tap it. At that point, it becomes more than likely we actually are about to base off. Because remember, this is a swing that made from a last swing here that actually got underneath everything else. So it comes up and then it goes one last time to grab everything. Effectively, this becomes the max pain, as I like to call it. A bit of a hunt. It then comes up and it breaches this zone again. Huge deal. If you're a buyer in the markets at around here, I don't blame you. And that's why it rallies into the area that I was talking about. This is the zone. And this is, of course, big resistance, big supply, problems there. So coming into today, that's why we're sitting around here. Because everything was kind of more than likely setting up here. Once that breached, it became very likely we would travel to here. And if we breach this zone, we talk about likelihoods. And likelihoods become very likely we move to the next zone, which is 4150. So is 4100 a big area? I don't really think it's massive. There is stuff in here, but I think there's more sitting around 4150. Okay, that's just the way I look at it. Yes, it's a bit messy. Yes, there's stuff moving down. But that's where we first got our really serious change right there. And when that occurred, obviously we already thought when it was hitting exactly on 19.5 that it was going to probably turn. But when that was based on a huge time frame, I'm talking about small time frames. When that happened, the movement from here to here becomes much more likely. So let's move over to the Nasdaq now and have a look at the Nasdaq coming into today. So we'll get rid of this giant box. Here's the change. So there's the new low, change, bang, slams it, gets the demand. And then we breach through again. Next scenario, where do we think it's going to go to? Probably into those last resistances. That's where it went to. So that's that 12.5 that everyone's talking about in the stream. Someone yelled at 12.5. Oh no, they said 13.5. Well, 12.5 is what we should have said the first time. So we look at this and we say, okay, have we got change of trend on the small time frames? Yes. Have we broken the higher time frames? No. So we haven't quite broken through this area here yet. And once we do that, we'll get a lot more movement. And from that point, where's our next zone for something like the NAS? And I think the NAS does come into around this 12.9 to 13K, at least initially. And then the 13.5 is a big zone. That is where everything changes. But of course, 13.5 would be the full pull. So let's go back to the daily, do the full breakdown. If we move from here to here, similarly, remember the market's kind of moving in a form of wave at the moment. So if we take that distance, where does that put us from bottom to top here? It puts us actually a little bit past 13.5 to 13.9. But if we then go into the 1 hour, where are our biggest problems going to lie? So let's get rid of this. The biggest problems that we're going to have moving forward are going to be right around here, about there, okay? So that's going to be an issue for today if we breach through. So right now, coming into this market, things look pretty good. We go underneath here, that'd be a pretty big deal. I think we move back down to this level for the session. So if I was looking at boxes, if we breach this, we move to that box right there. If we breach this, we most likely try to go around here. So around that 12.9 area. If we breach 12.9, that becomes quite statistically likely. Might chunk its way up there, but these become the key levels that I'd be looking at. Remember, each zone is going to be met by bears. So even if you're feeling bullish and you think, oh, yes, I'm so excited to be in this market right now, the market in general is still bearish in its overall shape. That is, every single time it's been coming down, it's been getting sold off. So, of course, why would you not expect to sell off here? Why would you not expect some form of selling to occur here? Unfortunately, there will be selling occurring during, even if you turn bullish here and you think, oh, it's going up. So these become just the critical levels that you want to see snapped. And right now, coming into this market, even if it rallies, I could see it doing this. And if it does something like that, especially if it takes out those lows and resprings back up, that becomes a max pain for the day. The market's come and stolen orders off us, the retail traders. So here is a little back end area. This is where, if that happened and I saw that in the start of the session and then I saw it spring back up, I'd be like, oh, I know what you're doing. And I wouldn't be surprised at all to see it boom. So you're really just thinking about different scenarios. We breach through here, probably looking for a pullback then, very confident, of course, more or at least more confident in the bull side. So you've got your trade for the day. You see it come down, slap that area and go back up in the real market. Well, then, of course, more confidence probably going to breach this zone at that stage and you'll probably take it through and try to take it through that area. And if it just does this and it snaps that, and then it just kind of hovers and then goes back up, then all of a sudden, well, what are we looking at? Probably some shorting down into these areas. So there are three scenarios. We always know there are. It's just the key levels that you're looking at and the way you trade them with your system. So the way I see this market right now is it is looking like it's pressuring itself up. You've kind of got your left shoulder, you've kind of got your head, you've kind of got your right shoulder. That's not as deep as this one over here. That's good. It shows positivity in the market and things are looking better, but a lot of it revolves around this 12.5 zone on the NAS, and you saw before on the S&P. We've got a donation coming in here from Gungadin, $5 super sticker. Thank you very much for the support. Appreciate it. Appreciate it very much. Thank you. And Gary says, but that bottom didn't feel like a bottom or haven't had any bottoming stories. Hard to swing here. Well, you're not really swinging so much. You're just looking at the scalping concepts of the market. I mean, yes, I would expect usually a basing formation like that. Okay, a double bottom of some kind or something. But we know markets are fast. And while we got it last time, if you think about over here, we did end up getting a basing formation. It came up. Remember the first rip? Pretty aggressive rip for a few days before returning back down. So like from a trader's perspective, really what you're doing is just saying, okay, what are my probabilities? Where are my key levels? Where is my resistance? Why did it stop here? Well, you can see exactly why it stopped here. There's a huge level of supply here, guys. And if you bust that, then you usually expect a small pullback and then a rally into it. But if you bust it, at least if you have systems to do with breakouts, you know what's going on. It said, you know what, I'm ready to make the next move up. And that's what, you know, is very, very possible here today. Scott Morgan says, max pain isn't that painful when you know the levels. Well, max pain is painful mostly because people don't look at the charts. Like you look at US 500 what people are going to do here, like if you're doing multi-time frame analysis and you're thinking about this level here, you know there's a low over here. There's that 20% because I told you about it. Obviously, you might have been able to come up with that yourself as well. That's fine. It's all cool. But when it makes a new low in a level where you think there's technical support or demand, you're probably not going to short that low. Like that would be a stupid place for you to short. Yeah. But a lot of other people, maybe someone unfortunately here, get trapped into trying to trade that short. I mean, there's no shame in it. It is what it is. The market's made to extract people from these orders. Remember, it rallies, oh, it's over. And then it's like, ha ha ha, bear's like, yeah, suck that, guys. You're so wrong. You're so noobs. And then again, I just wouldn't be making too many short decisions through here because the real short decisions were made realistically by many people in this area here, when it busted off there, high chance it was getting here. So this area here to this area here become highly likely. So what's the point of shorting in the zone? You want to see the zone broken. How to make a donation here? You should be able to click on there should be like a little dollar thing on your phone or something. I don't know. I just know it says super chat or something, man, but something like that. Thanks very much to 805 people joining us. Hopefully you guys are enjoying the content. We'll go through some of the lead indicators that we're looking at as well right now and trying to understand what's going on with this market. But in general, I like to put these indices at the start. These are just some of the key resistance areas that we've got. We've obviously got that here. I already had that set up on Friday, so I expected it to have a bit of a problem here. And the next thing is obviously this zone. So I think that 4150, 4160. And then after that, that's all going to correlate with the Nasdaq pretty easily. I mean, the Nasdaq's very similar. So these are just how I look at it. And right now, if I was being a bull, I'd be hyper focused around that area, those lows here, that 12,230. How it interacts with that zone, I think, would be very important today. The Westerosi Ninja says, do you foresee a sector rotation back into tech with a corresponding fall in staples short term? Seems like the fall was due sector rotation out of tech due to the indices being so tech heavy. Yeah, look, absolutely. Rotation is a massive thing. I teach it in the mentoring. I obviously go on and on about it. But yes, look, we could see a movement into tech. You've just got to think tech would be most likely bought, yes, if the market was truly rallying. I mean, we're all talking like this thing's over and it's all going to be great. No, we don't know that right now. We just suspected this was a low point that would be defended. Remember, where are all the puts this week? Well, if you think about the puts as per the weekend video, these are where the puts are. So we've got puts sitting all over 410, 400, 380, 360. A lot of negativity here. So we kind of think that may be defended. That doesn't mean the market can't go lower before it goes higher later on in the week. So while there's defense here, that's pretty important to check out. I mean, max pay is sitting at 428. So that would point towards the market moving up a little bit more as well. 428, we're sitting at 400 basically. So 428 would get us all the way here. And that would be pretty crazy. I doubt it's going to be there later on. But this is why we thought there'd be defense there because of those puts. Now all of a sudden it's starting to switch towards people buying calls again. And we'll see what happens. Let's move over to some of the lead indicators for whether this market's truly absolutely diving and going all the way down. So copper, obviously Dr. Copper, people call it. It's found its base a little bit, tried to bounce through. That's not necessarily a negative thing. You look at the Chinese market today, had a little bit of a bounce, obviously off those lows. Not necessarily a negative thing. Kind of looks like it's potentially accumulating here now. Not really my favorite market, but certainly there. But the US 10-year in general, a bit lower than it was the other day. Again, possibly a positive for the markets because things are looking a bit better. A new low would certainly be better for this. We've got treasuries. which are corresponding to that. Obviously, hitting a low across the board, bit of a demand zone. They've moved in a similar style wave to the rest of the market. First move down, you can see the distance. Second move down, you see the distance. Movement up, first time over here. Movement up this time, ideally here. Again, makes some sense, yeah, when you look at it technically. Obviously, you're trying to predict the future. It's not that easy, but you know, we are bringing together some ideas. We've got VIX dropping down here a little bit. Again, theoretically positive after hitting a 35 fear. And in general, that's kind of the other stuff. The only other one I'm looking at is DXY. So I would love to know what the dollar index ends up doing. So if we look at change of trend here, we've got a new, it's already actually taken out one of the first time frames. That is, you know, a lot of time frames. This is a trough. It's taken that out there, and it's also taken out this one and gone a little bit lower. The one I want dollar index to actually break down, because remember, you're trying to call this to top off. That's not easy in an upward trend. I wouldn't bet against it yet. Is I'm looking at it taking out this area here. And if it takes out that area, let's say it does this, I expect a bounce, sure, but then I probably expect that to be the end. And I'll be creating this in some form of distribution in the future. And if money comes out of cash, let's say that's what happens. We don't know, but let's just say that's happening. It's probably driving into bonds and risk on assets like the Nasdaq, etc. So yeah, certainly the ones that are looking there. I've got a quick donation coming in here. Dark Gale TV, Australian $2. Please check wheat. India bans wheat exports. All right, we'll check that out in a second. Ulrich, great to have you here. Thank you very much for joining. Thank you for the donation there. We'll check out wheat soon. Jupiter says, everyone is expecting a bear market rally and a massive second sell-off. Shouldn't it make us suspicious that everything will come completely differently? Well, I don't really know what other people are suspecting because I don't look at them. I mean, you guys can tell me. Chat, you tell me. What's everyone pumping out on the internet this week? I just don't watch them. I don't know. So you tell me what's going on. Is everyone saying pumpy then sell off? Or are they saying pumpy then all-time highs? Or are they saying sell off here and it's all going to hell? Be interesting. Let's see. Israel says, I know Wall Street Bets is thinking it's going to tank. Bear market rally. Someone says bulls are the minority here, Laurie. Okay. Well, keep coming in. Keep coming in. Actually, maybe what we can do is a poll. Polls are good. Polls will help us. Is everyone wait. Are content creators all bullish or bearish? All right, I've given you a couple options. There you go, guys. Vote that. Let's check out this wheat. I do like a good survey. All right, we'll check out wheat contracts. So wheat, certainly has jumped up. You know I hate wheat. Wheat got me once. Fool me once, wheat, not fool me twice. Look, if they have banned contracts on wheat, the problem with these markets, you got to be really careful here, guys. If you've ever held one of these contracts for a long time, it can brutalize you when there's swaps. And I just don't think it's a good market personally to be involved in. I mean, I've never had great luck in the old softs. I mean, I've gotten things right, don't get me wrong, and made money. But when I've held softs for a while, it's so bad. And, I really don't like it. It's a market that freaks me out. And the reason it freaks me out, at any moment, tornado, hurricane, aliens, I don't know, anything. The paddock gets crop dusted by aliens, guys. Anything could happen here, and then your wheat contract could be wrong. Okay, whatever you've gone the direction, the aliens have ruined it, and it's gone the other way. So I'm not really a big fan of trading the wheats. I like the metals, don't get me wrong. I just do not like these types of things. And it may be say, fool me once, I'm not going back to you again. That's what I'd say. So whatever it is, it'd be purely speculation. I don't know what's going to happen if India ban it. So I don't want to trade it. And I'm not even going to speculate. If I looked at this chart, I would say that whatever was coming, the market already clearly had a bit of an idea. So that's the way I would see it. What was happening is here, and I wouldn't chase the news. I hate news trades. No. Thank you very much for the donation. A few people want me to do oil. We'll move over to the oil in a second, and then we'll do some others. So general market idea today would be really watch these zones, as we said. So just remember, we'll go and review it again, but we're at a point of resistance heading into today. I've had this 40-30 zone for a few sessions here, and obviously I had it already, and I thought that would be a tough area, and I wouldn't be surprised at all for it to potentially come down here. Obviously, a bust off of a new peak, that's a big deal. Then we go to 41.50, 41.60, at least how I see the markets. Obviously, that's my opinion. You guys take it as you wish and you do your own things. This is not advice. Let's move over to US oil, 110. Let's check out that. Let's go to the daily. We can get rid of our original concept because that worked pretty well. So look, US oil is floating on the resistance. It's really had some pretty decent little kind of moves on here. And if you're thinking about this as, oh, is this accumulation, which I think is, a valid concept, you've kind of got this high over here, which ruins a lot of your bull bust kind of scenarios. Obviously, that just says 116. Okay, it stops there. So US oil, yeah, I've been disinterested in it the last couple of weeks, mostly because a lot of the ways that I would usually trade it, and I just don't think it's working as well. It has been swinging here on the smaller time frames. I would just say, look, if it busts this high, it probably goes to, I would think 114 at least, if not 116. And then you could even scale off and leave some on because that would be pretty bullish. But we are at the mass resistance. Like, it doesn't matter what time frame you look on, you're at a mass resistance. And is it showing the right signs? Higher lows, that's a tick. That's good. Resistance, sure. Do I like it? No, but that's because I have an overall bearish bias on oil, which could be wrong, but I do have an overall bearish bias. So I'm not really looking at buying it. And I think I'm probably jaded from that action because when I say that, I've really been relatively shorting this market more than longing it at key zones. And yeah, this would be an area that obviously I'm looking at more as a resistance than a breach. So be careful here. If it does bust the new low, so let's say it goes like this, down, down, down. If it takes out that, I'd be very worried for you. And what I would expect at that point is this and then that. And then, more likely to actually take shorts. So, yeah, I think it's just at resistance, and I feel like it's more short than long. Live stream through the whole market today. Yeah, that's not easy, bro, for me here in Australia, unfortunately. All right. Thank you very much to the 1,000 people coming through. Appreciate it, guys. Remember, smash that like button if you could. Let's look at a few other things that are going on in this market. So we'll start off here with, I guess, the Tesla. And we'll just have a quick look at it. So Tesla's in all sorts of trouble. And what I mean by that is you've got China and the lockdowns in Shanghai. You've got the lack of sales. You've got all these new cars coming for them. And yes, I own a Tesla and I quite like it. But that being said, there's a lot of competition coming on. So I'm just going to put an alert out there in my opinion. When I look at this chart and I see it on the daily and I see it on the weekly, it just looks disturbing to me. And what I mean by that is, if we think about it, here are some of the really, this is a market that isn't normal. And what I mean by that is that's a huge run euphoria. It has the standard signs of bust in it. And then it has like big rip rallies with second euphoria and then with huge busts in it as well. I don't like that kind of market because it reminds me of other markets I've seen in the past that have done this. Now I know, it might be like, oh, I'm hating and stuff, but I'm not. Yeah, it's not AMC, but what I guess often happens is you do get these secondary euphoria runs on markets that have had like an epic bust. And one thing about Tesla is it hasn't really copped it much. Now that's either because it's really strong or it's being held up by tons of retail traders. It's either or. I think that, a few long-time Tesla bulls, some of them are getting a little bit more bearish on it than I've seen in a while. That being said, a lot of it comes down to also the Twitter deal and all sorts of things. So let's have a look here. What do you guys think in the chat? It's super high on valuation in a time when valuation seemed to matter. People care. Westerosi Ninja says, I got the diamond hands and they're strong. That's good. Having conviction is good. So if you have a look at forward PE and those types of things, certainly there. I just think that it's certainly at a very, very interesting level. So let's just quickly think about it here. We've got the gap. Obviously, we haven't seen as much strength out of it due to all the news that's going on. And that's probably the big problem here. This is susceptible at the moment to news-related trades out of China or out of just generally Elon. And because that's going on, it becomes less technical and more based on news. So that's why I wanted to get into this one just quickly here. I just wanted to tell you, I don't think it's very technical right now. It might look like it's technical and it's found base, but I feel like this is a news-based trade at the moment. And that's why, for me, I usually think Tesla is one of the best day trading stocks out there. It's got some great volatility, some great trade levels and all of that. I like it a lot for it. But I think it's news right now. I'll see what the chat thinks. What's the chat think about it? Is it news related or not? So long leg doji here on Apple. This one comes back into our beautiful demand zone. That was really nice. We get a nice closure there on the Friday session as well to the bull side against it. I like that kind of setup, and I do like it. And it even almost filled on the small time frame. So I think Apple's actually looking okay here. Pretty much the buyer of last demand. If it gets underneath here, geez, I tell you what, I think the next level is really bad for the markets. And Apple will hold the consistency. I mean, I'm thinking back in these 125s. So yeah, very important it holds up here. This was the literal point for Apple. And if it can't hold here and it starts floating back through and down low, I could see our markets getting tanked here very badly. So yeah, that would be pretty brutal. And I think that's the most likely here. So Apple sitting on SUP into today. BCF says right now I am day of only cash is king. So you're only doing the day trades. Fair enough. Well, as I have a rule for anyone that's coming in here for the first time, we have a rule on the channel and just in general in life. If VIX is above 20, generally it's a better scalp and day trading environment. If you wonder why you get ripped up swing trading, just go and have a look at the VIX. If the VIX is above 20, it's better to scalp and day trade and potentially invest. Okay. When you are doing these strategies, you tend to have more of a smiley face. Whereas if you're swing trading, you can get absolutely wrecked and destroyed. And usually the rule is, very heavy VIX really gets you because it takes some of the technicality out of the market on the high time. And there's a lot more traps and you get slaughtered swing trading. So if you ever wondered why you get slaughtered swing trading, usually a high VIX, that is volatility, is not good. So Apple will move with the market. As I always say during high volatility, better off looking at the S&P 500 than picking the poison that you want. So whichever one of the stocks you want. And because it's going to give you the best signals. So the best signals will come from your major, like the US 500 or the Nasdaq or the IWM, which also hit that low. Remember that. And IWM Let's get rid of that. IWM here. This is a very, very interesting zone for it because look at that Friday close. Look at that. It makes a new peak off the last swing here, off that doji. So it actually made a new peak. And if we look at this small cap, it actually based much better as well. So if you think about the base here, it's quite a lot nicer than the rest of the markets. And if we go to like something like a daily or a 2 hour, we'll just go to the 2 hour. It again is kind of presented this idea that yes, we may trip down, but that base looks pretty strong. And this has actually made a new peak. So it's made a new high. So it's actually changed that trend. So I'm thinking, you know, if I looked at just this chart, it would be to me like this. If I was just looking like that. And then I would be looking, of course, next level, pretty much somewhere in here. Which is, what is that? 187. Maybe even higher, possibly even 189, somewhere in that area to that area for take profits. So IWM also looks pretty good on the charts. We'll take this quick question here from Simon. Thank you very much, Simon. Appreciate it. $4.99. Hello, Tom. Long time. What do you think of Hood? What do I think of Hood? What does the chat think of Hood? Chat, what do you think I think of Hood? I've said it every time, okay? Don't buy IPOs in America for at least the first 12 months. They are trash. They are trash. They are overpriced. They are trash. Every time you get pillaged buying IPOs in America that are tech, it's horrible. Coin, horrible. Hood, horror. Boxed, bad. Twitter, bad. Facebook, bad. Snowflake, bad. All bad. It's not attacking you, Simon. I know you're not talking about it at the start. We're talking about it now because, of course, you're thinking well ahead of everyone here in the chat. We're all 12 months ahead now. We're like, you know what? We're coming in to look at it now. So we'll load up Hood. What do I think about this? It's DoorDash. It's Uber Eats. That's what it is. It's a competitive field of no money brokers. Let's just quickly put this in perspective here. Let me just zone this up. God help you if you bought it at this price. I'm sorry. I'm sorry for your loss. Okay. So this is quite common. Obviously, rallies at the beginning of IPOs, that's quite common. Now we move on though. So when did we launch this? We launched it in July of 21. So theoretically, I'm not interested in it still. It hasn't been 12 months. So I don't like it. If I look at it on the base, though, it could have just max pained. And the main reason is because it's not like it doesn't have a business. It's just that I'm sure it burns cash. Not that I've looked at the cash book. And it kind of reminds me of one of those industries just like the delivery services. I could be completely wrong. I'm probably right here, though. I think that this reminds me a lot of Uber. Remember when Uber was the coolest thing ever? Anyone trade back in the days when Uber IPO'd? So cool, people said. The best stock. Everyone was waiting for it. They loved Uber. And then all of a sudden, everything else started competing with it. And I feel like every month I hear of a new one of these Robinhood style brokers opening up. And then, of course, you know, moving into another field. And some of them offer some damn good service as well. So what's their competitive edge and how are they going to do it? It's like Zoom. It's like the Zoom. So 1066, clearly it bought up. I'm not convinced. What I would like to see is a lot of structure. If you get it right, there's plenty of money on the table in the future. So was that max pain? Is this going to be some kind of Wyckoff accumulation? We're going to see that being a low, bit of a move up. I could see it stuffing around here for a while. And I would say come back to it in the future. But great lessons for everybody. So thank you very much. Can we get some thoughts on AMD? Yeah, we'll check that out. We'll check that out. Thank you. Rivian. Yeah, I actually never looked at Rivian. I know a lot of people talk about it. Let's have a look at this thing. Oh, is that Hood 2.0? Oh, it's a horror show, guys. They're all so bad. I mean, we don't. I mean, I'll show you the obvious one if anyone isn't aware of it. I'm sure you all are by now. Oh my, no. Do not buy this. I mean, someone probably says, "Oh, Snow was good." Snowflake is a legitimate company, but that doesn't change the fact that by the time you were getting on to another year away, this stock is still not fairly priced, as in it's bleh. It fell. And this is the best of the bunch. Go look at Facebook and Twitter. I mean, people forget how bad Facebook got. And Twitter. I don't even know if Twitter even recovered. Let me have a look at Twitter. It took a long time. I'm going to put the weekly on here for a second. Yeah. I mean, December 2013, massive hyper bubble of hyper stocks, February 21. Just, ugh. So I'm not a huge fan of these types of things. Oh, big super sticker. I better do AMD immediately. Michael H says, time to duck equities and rotate into commodities. Everyone's not buying them, please. Well, XME, the metal sector, it certainly is on a big level right now. Thank you very much, Bartia. Thank you very much. Appreciate it. $20. Can we give him a clap? Let's get some claps out there for this. This is very cool. Let's check out AMD. He's impatient. He needs it now. I am being a bit capitalist here. We've got to go over and have a look at this. So AMD, well, I tell you what, that weekly, damn, that looks spring-like, doesn't it, off the bottom? Nice lower low. So it formed that lower low and it breached and it came back up. And that's good because that shows some serious intention of the bulls. We have a look at the price here as well. Looks pretty good. I mean, obviously we have the rejection here. We have the bullishness. That's effectively a long leg doji. A lot of clear orders probably floating around in this zone here, a bit of equilibrium. Look, I see it basing. I mean, AMD in general, it looked like a horror show. I said, why is it going to stop here other than this area here? And it has, and it's based off that. And it looks much better. I mean, you get through 99.62, however you do it, you get through here, you've changed the trend on the daily. So you've gone boom, boom, a serious change. You probably expect it to come down a bit and then bang. And if that occurs, you're going to have a little bit more of a smiley face because that is the right setup for accumulation. Volume is also very high. So the volume was dropping, and then all of a sudden, after that earnings, we saw huge amounts of volume. That is, again, a tick. I like that. It means someone's buying and someone's selling, but there's a lot of purchases there, a lot of transactions. Remember the laws of pressure. And then the next zone would be obviously sitting around here, about that 122 area. So look, I think 100's a problem for you on AMD. There's no doubt. It's coming down here today. Let's have a look at the 1 hour. I would just use the major indices. That is, use the Nasdaq and everything to look at this more so than the stock itself. But if I was thinking about where it's coming back down to, probably makes the most. Oh, see, I mean, I hate these gaps because that opens up them. Look, where I've got this little green box here is probably about correct. So it could come down to like a 90, 91. And I would be hoping at that stage for that turnaround. But this breach will be a big deal in the future. Should you be able to get it. Thank you very much. Jesus, that's a big position. Good luck. Don't tell other people your position, man. It's yeah. Travis says another cult stock. It is pretty much. And when you say that, I get what you're saying. These types of stocks, the AMD and the Nvidia at the moment and stuff, they do have a bit of a status on the internet of being held, and that's good and bad. If you understand what it means, is when the bulls go on, they often blow really hard. That is, they get euphoric very quickly. Like a Tesla gets euphoric, and a AMD and an Nvidia get euphoric very, very quickly. So we're about 14 minutes off the open, and I do need to just take 1 second, guys. Don't worry, the screen will come back in just a sec. Just do this. I'll get up some programs for us. I'm still here, just quickly grabbing all this stuff. Okay. All right. Ready to come back. So we had a few questions about max pains and those types of things. Yeah, we can look at those, but really this week is a max. We'll look at the daily max pains on the SPY, see if we can grab anything from that. Again, thank you for the donations. Everyone's been donating today. Let's have a look at the pre-market here. So we've got Netflix coming in 187 to a 193. Cool. So that's coming up. I haven't looked at Netflix recently, but it will be worthwhile considering how that's floating around. Then we've got a few other companies. 3M's one that I've been hoping will eventually turn around. I've been looking for the breakout on that. Caterpillar, so a little bit of defensives. Netflix seems to be the one that's got the most amount of bullishness in it. Adobe, Zscaler, nothing too much here in the pre showing us too much help there. Deer, actually, I wouldn't mind looking at Deer again. Let's just quickly load that up. Here we go. Okay, so I want to have a look here at Deer. Yeah, I could think of better. Did you guys see how bad Nucor got? Ooh, it's down all the way. It's taken it all off. And this is why when stocks come into earnings, everyone, and they're up so huge, because remember, this stock, and plus Kramer loved it, this stock here went up 85% into the earnings in 1 quarter. Whew, it's taken all of it off. And if you look at metals and minerals and mining and all these kind of ones, think about this. Look at where this market is right now. You know, if you believe inflation hasn't peaked and you think there's metals and mining is good, the metal sector is actually pretty decent. It's taken everything since that's the day of the war. That's the day of the invasion. That's the movement since then. And we're back down to this level. So a very fascinating zone. I think it's copying this mostly from China. So is again, the lockdowns are very uncool for metals and mining. But certainly a big, big zone. A lot of people underestimate things outside of technology, yeah? Interesting. Gary says Kramer has been saying that this market is like .com, so he's mad bearish. That true? We need reports on Kramer. Everybody, is Kramer bearish or bullish today? We need to know right now. So we've got the end of the poll, by the way. Oh, thank you very much for the day trader status here. Appreciate that. Thank you very much. And we've got another donation coming in. We'll read that in just a second. Let's end the poll, see what there's. So most people are bullish, then crash. 63% bullish, then crash of creators. Bearish from here, 21%. And bullish to new highs, 14%. Okay, interesting. Bullish, then crash. So based on this, it's bullish to new highs, guys. That's what we're doing. Bullish to new highs. That's the way, yeah? If we're going with the least likely scenario, therefore the most likely, bullish to new highs seems to be what everybody is not thinking. Frank says it there, Franklin Matthew. So the new highs then, yeah. That's true. Darren Jones, $5. Thank you, Darren. Tom, what do you think of the QQQ 320? Will it act as resistance? Let's have a look at the QQQ. Obviously, just the Nasdaq for anyone that doesn't know, but the ETF of it. 320. That will correspond with. Just have a quick look, make sure. That should correspond here, shouldn't it? In that zone there. Let's have a look at the QQQ. Yes. That makes some sense, I think. Yes. Mid pointing through here. Probably a little lower is where I think there's going to be issues, like around there. So if I was looking at this market, I would say like that's a big range, unfortunately. Yeah. I could see 320, but I could also very easily see 315. And that's probably my problem. I think more here, at least initially. Yeah. So around there, 314, 315. That's first resistance there. So it goes kind of something like this is our thought process, or possibly even a gap fill, then up. Real Rugged DIY says silver and gold manipulated and cheap are certainly manipulated and certainly getting in the zone. So you'll notice my gold, I'm in the zone right now. I'll show you the daily. This is the zone. Oh, I tell you what, that was really nice. Yeah, that was good. Damn it. Yeah, I could see why it would buy off that. Look, I'll say this. People gold's going down, yeah? It shouldn't be going down at this stage, especially if you believe peak inflation's in. Gold hasn't really done a full change of trend or anything though, so you can't really, other than just knowing there was a lot of demand over there and guessing, you can't say that that's the low. It's still in a downward trend. There's nothing to really fight against. That's how it is. It is in the zone though that I would no longer be very short this particular currency, as I call gold, because it is a currency. But it's right around that area. And I specifically liked right around here, because you got to remember, I was very bullish on gold over here, obviously to the peak. And we talked about that at great length. But I was very bullish here. And I like this zone. This area tends to be quite good for the bulls to come back in and demand gold. Gold's in distribution phase. Like a huge distribution? No, I don't think so. I mean, it could be. You're talking about a monster, though. You're basically putting it on like a monthly and saying, all right, we're back. If this doesn't have enough gold history, let me get some more gold history. Okay, so you're talking like this again. So that's the full distribution he's talking about. Look, you won't necessarily know that. I mean, obviously you could think of it as distribution that could turn into potential accumulation if it snapped a new high as well. I think that people can't deal on this big time frame here. It's too big. So when we talk about things, we've got to consider here is a potential area of demand. Well, pretty much is an area of demand for sure. And they're going to try to buy off that level, which they have. And now we want to see if they can switch the trend on the smaller time frames. And if they can, then you can say, okay, maybe the bottom is in. And again, if dollar goes down and it weakens, it'd be stronger for gold and silver, yeah? So if we can figure out what the hell DXY is doing, which we're getting more of an idea by the day on what DXY is doing, then we can make better decisions. Reese, Dylan, can we look at the DAX? Oh, two of you asked for it. Reese and Yao Ming, I believe, Singapore $5. Can you comment on the 2-hour chart for the German DAX? We certainly can. And Reese says, can we look at the DAX and the Nikkei? Yeah, sure. We've got 5 minutes till the market comes in, so we'll check them both out. We'll put these both on. Thank you very much. Let's have a look at the DAX to start off with. 2-hour chart was the idea. So firstly, that's my idea for the DAX. So obviously, I want to see DAX through this massive trend line down before I'm convinced of much on it, really, other than it's still down. And let's have a look at the 2-hour. Okay. We'll just get rid of these horizontals for a second. So yeah, I've had that trend in the daily for a while. The one cool thing if you're feeling bullish on DAX, is notice the futures here. Notice the futures here are kind of consolidating and coiling. Well, this is actually the real market open for the DAX. But basically what that means is it could be really ready to split through. And I think if you get a new peak off here, that's going to be incredibly positive towards the DAX. I'd give it a few ticks after that. You've made a max pain. You've bounced back up. You're breaking a serious downtrend. I mean, look at that daily again. Just look at that daily. There's a serious downtrend, which you'd be snapping for the first time with the daily close. It's a serious downtrend. And even this candle here, when you took that out, much better. And this is actually in a bear market. This is a technical bear market, 100% technical bear market at the moment, the DAX. So if it can breach, that's a positive. I think the US market will have to come with it. And as we said, the US market's shaky. It's doing its little shake around. So we've got 3 minutes coming in. We'll do the Nikkei as well. Nikkei. We'll do that. We'll use this one. Just quickly, very quick on this. I haven't actually really looked at this market for a while. I'm not interested in it, unfortunately. Look, that's super confusing. Super confusing. I think it's madness looking at this right now. Look at all the doji. The market's at like equilibrium. It doesn't even know what it's doing. That weekly is a horror show. Let's check out the daily. It's just full on consolidation first. Maybe what you'll do is possibly you could kind of do this on it and say, well, it's trading between these two, and I'm not sure if I'd use that. We got one from here. Yeah, I don't like that. Makes no sense, unfortunately. Thank you for the donations, guys. All right, we've got 2 minutes. Let's get into this open. All right, we'll load that 5 minute up. Okay, here we go. So we've got a 5 minute. We obviously know that it's tried to test this zone a few times. I've said this is a huge area for it. If it breaches, I feel like the next level is 4150, 4160 for the SPY. It's currently making a series of higher lows, though that doesn't really matter too much, but it is making a series of higher lows. If I look at this on a 1 hour chart time frame, you can see where there's been some demand. These wicks kind of represent that. So there's clearly buyers that have come through several times here. I expect this to be a semi-defended zone. If it busts this zone, I wouldn't be surprised at all for it to take the gap. Okay, and I think the gap ends at 39.20. So just be careful there, guys. This is where the bulls will try to defend, in my opinion. It's a guess, but it's educated, obviously. And then underneath that, I think 39.20. And then if it hits that level, somewhere around here, I would expect some people to try to buy it back, because at that point, we basically fill the gap. So we fill that gap that's sitting pretty much in here in the real market. So we just opened then. Let's find out what's going on. Breach of highs here. That is, we take out the 40.54, 40.55. That allows bullish traders to come back in. It goes something like this, possibly even down here, and then boom. And that would be a very logical kind of situation as well. So it all revolves around here, here, and here for me today, those levels. Hopefully that helps. That's just how I see it. Small cap and mid cap rally, please, says Real. Absolutely. That would be cool. A lot of people burning in that area, unfortunately. Let's do the percentage change here. Thank you to the 1,250 people we've got here. Smash that like button if you've been enjoying the content. We do always do this every Monday, so remember to come back. We've got Netflix up 3.8, so that was strong in the pre. It seems like it's strong now. ASML, have we got tech going in here? Shop taking another 2.31 down. Ooh, that stock cannot get respite, can it? Shop down. Is there a move around? Looks like Apple also down about 1%. So the NAS is a little bit weaker here in the pre. And we'll just scroll through some of these stocks that you guys like. So we've got Square down 3 after 10. Remember, they did big days on Friday, and that's partly the reason here. Apple 1, Google only down 0.44, Microsoft down 0.9. Some stocks up, like Splunk, DKNG is finally going green for a day. Shop down 3, AMD down 1. Not too bad for AMD. And the other sectors. We'll bring up kind of what's going on here in actual sector land. Let me show you which sectors are actually powering today. And I'd like to bring up Netflix as well, just because it's interesting to see that actually having a bit of a rally on it. So has it put in the max pain low? Netflix getting quite a lot of interest the last 3 days. Super bullish in terms of its interest. I would expect Netflix to probably have problems here, though, potentially turn and still to consolidate. I am interested in Netflix, contrary to other people's beliefs, because I do think that they can turn their business, and they're actually they are solid. But yeah, this is just possibly a little bit of a rally. Nothing enough to. I was hoping there's something better there. Let's have a look at the day movement on the sectors so far. So metals and mining, number 1 so far today. Metals and mining, XME, best sector so far. Energy up 0.95, gold up 0.19, utilities. So mostly defensives here in the old crowd of stocks. So the metals, the one we looked at before, XME up the best. Utilities, so defensive. So it's a little bit of a defensive morning here. These are pretty much what's done well most of 2022. And these are obviously the defensive units. So you kind of know the market, at least initially, is rotating that way. And technology is the punished sector for the session. Not unexpected. We are at resistance on the SPY. I'll take some readings here. Twitter down 4. Lisa says, yes, Netflix is a good. By the way, guys, I didn't used to like Formula One, okay? I'll admit I didn't used to like it. I kind of watched a little bit, but not much. I would recommend, even though I know if you already like Formula One, do not watch Drive to Survive. It'll drive you nuts. But on Netflix, I recommend. It's pretty good. My wife even watches it. She likes it. She likes Formula One now. It's bizarre. So I think they should do it for all sports. I'd love to see some in American football and NBA and stuff. So let's have a look here. So we're coming back down to this level. Kevin N says shop hit 300 support and hit 400 resistance. I think it hits it hit a bottom. Yeah, shop is getting all sorts of psycho. ARC bottoming. Yeah, I would probably say ARC. All of these hypers, look, they have inflicted incredible pain on traders and investors. And I do think they're close to their lows. They've got to be really close now. People hate them. And when people hate them, from lovers to haters, you know you're close. So we're in our kind of first demand zone here for the NAS. Obviously, next levels, there could be something in here. But I'm looking at the Nasdaq this way. So if you think about it, there's a big gap range here. So I'm thinking if we do fail to hold up this current defense zone, the next area probably becomes, clean up the gap before we can move up. And that's why I think that's what we're looking at. Let's look at the S&P. So the S&P is the better signal than the NAS. The Nasdaq will be maybe a better trade for you, but if in times of serious risk and VIX high and all those things, never trust the S&P, guys. Oh, sorry, never trust the Nasdaq. Always trust the S&P. You've got to trust the S&P. The S&P will give you better signals than the Nasdaq will. The Nasdaq gives you a lot of fake out breakouts, whereas the S&P 500 gives you a lot of action, and it gives you the best technical sound stuff. That's really what we're looking for here. Franklin says, I feel like we're going to rip in like 3 minutes. Well, we've just come into the start of the day. If I was looking at these two candles, I would say, ooh, that looks kind of sick. At least if I was looking at it that way. But I know that that's the futures market. So yeah, we've got the demand. And then the next level could be all the way down here just to fill that gap out. Brendan. Well, Brendan, you're not wrong. If hate marks a bottom, then gold bottomed 10 years ago. Well, actually, I think you probably want to go back on that one because it did, didn't it? Didn't it? Like, I think the year was it 2000 and, God, was it 2013? It took a dive. I remember the day. I remember watching it live, just getting chunked, got destroyed. I remember it was just like bang, 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 bang. And then you heard in the news the next day, people flocked to buy gold. And then it went down even further. Then it hit like 1,000 an ounce or 1,100. How is Netflix so strong? Probably just institution buying it up. Decided something. So yeah, look, I mean, these are, as I said, these are the kind of levels that I look for. And I think with trading, you've got to be patient. You know, if I was really to write trading in a few words, I would say this: patience, discipline, and risk management. If I was giving some advice to people, I'd say patience, which is really kind of like discipline, and then risk management. Obviously, you're your own worst enemy, yeah. Obviously, in these cases, so you've got to really believe in your positioning. It's not the other day. You could have easily DCA'd in levels, or if you believed in that 19.5 down for the SPY, then you really were getting the perfect kind of low. Fake market futures, so rally confirmed, says Kunal. Michigan Dirt Bike and Trail Reviews. Sounds like he's got a bit of a channel there, guys. Maybe you can check that out. Institutions flushing our weak hands right now on Monday open. Yep. Well, they say I always say the first hour is the retail trade. So this is where people come in, they chuck their pay packets in and all of those types of things, get excited. It does seem to look at that Apple though. Interesting. It's just sat flat at 1, whereas the hyper stocks, have some of them started turning? Let's go to the checker here. Percentage change. Netflix up 4 now. Was up 2 point something when we looked at before. Caterpillar. Lockheed. I don't know where that is actually on a chart. Vulcan, Shopify. So Shopify is still getting hit. Nucor just so sick. It's disgusting. And yeah, these are not really moving too much. So now we've got effectively what would be a 2-hour long leg doji. Remember, the markets are technically fractal, guys. So when you're looking at markets, there's actually nothing wrong with looking at a 1-minute chart because it's kind of more of a true representation of the market structure. But you do need to understand what's happening on the higher time frames. So obviously we've looked at that. Just because you're looking at something on a 5, other people have got a 3-minute, a 10-minute, a 1 hour. I like using daily a lot. Daily really helps because when you're looking for daily closes, you can get kind of an idea of where the highs and the lows are. And obviously you want to generally use the S&P 500 real. So notice there's a lot of daily closes all around here. That shows you that that's a mega level in the future. And of course, how do we find a level like this? Well, we see those daily closes and we know that something interesting is happening around here. That's how we kind of can predict when the markets come up, there's something going on in this exact zone. A lot of structure. Erwin Martinez says, think that for the amount of fear in the markets, fear by market movers, it really isn't that bad. I think we'll bounce in less than 2 months, but who knows? Yeah, look, the fear is interesting because, I've got a Cork Dorks just sent me this. And this is an interesting stat. Here you go, just to put it in perspective of money. So everyone can see this here. More value lost than .com crash. So the .com bubble, 4.6 trillion. Global financial crisis. Really, is that true? Oh, yeah, on the Nasdaq, it may be true. 2.3 trillion. COVID sell-off 4.4 trillion, and just shows you the scale nowadays of these markets. 7.6 trillion in the current decline. The difference is, though, and this is a stupid heading in some ways, because yes, 7.6 trillion, but we've got to think, well, yeah, but it put on probably about 14 trillion in terms of extra froth. So that's a huge amount of money, sure, but it's the Fed knows this. The market's still stable. Usually, this would be a full wipeout. Percentage decline matters more. Yes, that would be fair. Just an interesting stat there. Look, I'll go back to what I've said a few times here, and I'll say it again. I think this could be the best depender on whether we're in a market crash or not. And that is what the bond market is telling us. And realistically, we can see that by treasury yields. I have to believe that the market is smarter than we are, okay? And that is that the bond traders know what's up. They yield inverted, but they look, this 50% plus yield inversion seems to be very accurate. There's a lot of false yield inversions you get over time. Okay, a lot of false yield inversions. And this is all the yield inversions together. And if you think about it, it makes sense. The market has moved up in terms of yield inversion, and then usually we crash after that when we get that 50% plus yield inversion. We haven't even come close to that yet. The other thing as well is the Fed tend to drain the market and kill it. So if we have a look here on Twitter, follow F at fxevolution.com. And if we scroll down to a chart I shared, this is true. And that is that the Fed generally raises rates. I'll just quickly get rid of this message. And when they raise rates, they stuff it up. So what that means is that they can't create a soft landing. You know, this is a bad soft. Remember, the soft landing is already bad right now. Yeah. Imagine if they raise rates and then try to cut them in the future. So when they try to cut them, only 1 in 4 attempts is successful. And I just don't believe that they will be able to cut it in the future and get away with it. That's what I think is most scary, when they try to cut it again, they flatline. Because it tends to be when they try cutting it, we get a recession immediately afterwards. So yeah, I think that's the big problem here. The Fed have raised rates, and the most likely thing is they stabilize, and we should be most terrified when they consider potentially cutting them again. Could you take a look at Tesla? We can. So Tesla down 1.47. Markets not too bad here this morning. Obviously down 1 at a point there, but back up 0.49. Look, I don't know about the Tesla chart right now. I wish I could tell you more about it. And the reason why I say I don't know is because I think there's a bit of extra shenanigans going on here. There's the Elon X factor. There's the China Shanghai X factor. I heard that Shanghai just sold in the month 0 cars were sold because of the lockdown. 0 cars. That's not really good. I think it's a Bloomberg story if you're interested in having a look at it. Maybe it's fake news. I don't know. So over here, yeah, look, again, this just looks a little bit weaker than some of the other tech stocks at the moment. I could see, again, fill of gap, 720 area, and then hopefully a rally on Tesla. But if I'm looking at that chart, it doesn't really tell me much about whether it holds or not here. And it doesn't matter which time frame I look at it. It's all going to be the same. Because it's made a new low. And it's got under here as well this morning. So I feel like it wants that. Can I have a look at ADM? Okay. Tesla Q2 is bad. I think it could be. I just think there is some concerns there that are legitimate. Moving back down here now. So we'll have a look at the S&P in a second. ADM looks okay on the charts. Agricultural stock, is that right? Yeah, that's pretty good on the 15-minute anyway. Okay, it's not too bad on the daily. Yeah, looks all right. Dividend coming up, so expect a bit of a drop. But overall, that's the right type of turnaround story you want. Bullish hammer, doji, Hopefully it closes bullish today. That'd be nice. Let's have a look at the S&P. Here we go. We're coming back into our zone. Let's check out that on the 15-minute. Why have I lost my zone? There we go. Okay. All right. So let's see how this happens. It's right there right now. So it's, oh, that's a new low, guys. That's a new low. So now we see if it traps. Or is it a new low? Or is it equal? It's equal. Okay. What do you think about Net? I like Cloudflare, but again, it's just suffering from the same problems as every other one of these businesses. I do not like Unity. Cloudflare is good, by the way, but I don't know. I actually don't know how the business scales. Unity. Does anyone play games on Unity graphics engine and think it looks good? What's this? Unity will be the base for all infotainment development in cars. Really? I thought Unity had some ugly ass graphics, but I don't know what else it does. What's Unity? I think it's a games engine or something that other games get created on. It looks like mud. Gary has a super chat. Really? I miss your super chat, Gary. 1 second. I just want to look at this S&P. I'm kind of interested here with you guys. I'm just watching it. I know it's just sitting here. We're checking it out. But, oh, Gary, how do we know this isn't a markdown phase of redistribution looking at VTI log base C Discord? You didn't say, okay. And Philip Martel message retracted for $2. Thank you very much, Philip. How do we know this isn't... Oh, we've got a new low. So those orders got taken. How it reacts now is really important. How do we know this isn't markdown phase? VTI log base. I'll need to look at your image to see what you mean. Can you just send it to me privately, Gary, please? I'll bring it up for everyone. Okay, so new low. I'm still watching. I mean, obviously, I'm not particularly feeling like shorting this market, but I can understand why people will have up here. Because basically, if this happens and it reverses, think about what happens here. All the little futures traders have got the little stop loss, like 1 pip under here. So if you get a reversal from this position and then suddenly it turns into like a hammer and then it has a follow through, then all of a sudden what you're saying is well, we just inflicted some pain on these people and we moved it around. So that's the type of thing. I'm more reactive in these types of situations than predictive. I look for zones and I look for how it interacts with those zones. Blue Army says, what's up, Tom? What's up, Blue? So we've got a new low. Philip wants up row, U Pro, and T triple Q. Well, T triple Q we're pretty much already doing, which is just we're watching this level here on the US 100, which made a new low. Now let's have a look at the S&P. The S&P didn't get under here, but it got under those two. So yeah, our thoughts on the Nasdaq there, Philip. We want this to now rally, ideally. And then if this starts rallying even harder, well, firstly, we might find that bullish depending on our systems. And then if that does rally and it breaks through, here, that would be a big plus. And then, of course, you take out that huge, and then any pullback should be met by buy demand. UPro. Oh, this is just 3x, isn't it? 3x fund, yeah. Well, it's just exactly the same as what we've been discussing. I wouldn't ever do the analysis on this, though. B1, do not do the analysis on this. If you trade Ultra Pro S&P or any of these types of funds, TQQQ or any of these things, never do the analysis on this chart. Yeah. Always do. I mean, you guys know, yeah. Do not do the analysis on this chart. Do the analysis on the other one, and then you'll be fine. All right, we've got the chart. Cool. We'll just leave that up there for a second. I'll grab that chart up. Oh, what is this madness? Let's have a look here. Don't quite get that one. Let's have a look here. Okay. Yeah, I mean, the top could have been. So, all right, I'll just bring it up for everybody. So basically, the general thought process is, did we see distribution at the top? Well, I don't think that's really a question. Of course, we did. Otherwise, we wouldn't have seen this bust off. But if we apply multiple different methods and waves and all these types of things to it, it'll be much, much easier. You're saying, is this like a BC? Is this a UT and like a UTAD? And then that's actually the bust? I don't think it works like that far down. That's too much Wyckoff action for me. Yeah, that's too much for me in terms of that style. I would say no. But what I would say is we're probably in waves at the moment. So this would be an A, a B, and a C. And if you notice, it's kind of gone down correctly. 1, 2, 3, 4, 5. Bottomed, gone up with the 3, which it usually does. Gone down with, again, the same thing. 1, 2, 3, 4, 5. Which made it easier to think, okay, this is the bottom. And then we have a rally, like something. Remember, last time we hit the 5 here. That was the low, but we had a big movement up and then a rally. So I think that's kind of where, I'm thinking this is the most likely scenario like that. Yeah, that's just, again, just the way I think about it. I think that's probably too much. Microsoft new low. But I love Microsoft. It's not allowed to make a new low. Okay, so what you're looking for here, guys, 6 minutes away. Obviously, you're looking for this, which has made a new little low here, taking out some nice little demand. Not taking out this one here, but taking out some nice little demand here. That's the kind of thing that you want to see happen. Obviously, I can see totally why people would buy here. And I do understand the market's going to give it a crack. And of course, you're looking for whether you can see the follow through there. So, yeah, look, I wish everybody the best today. I hope that closes and we make a new high, and that's all good if that's what you want. If you want new lows, ideally not. Ideally, we follow what I was talking about before and we move up, but we'll have to find out. Good thing is as well, if you notice these hyper stocks starting to turn around. I know Square was down 3 or 4 before. Now it's only down 1. What else is going on here? Arcade down 1.77. How much was that down before? Okay, so it's holding its own, trying to big level there for it, isn't it? At 44. If it can hold up, smash that, that'd be a pretty big deal. Not that I like doing analysis on ARK-K so much. I noticed SE went up 20% on Friday. AMD putting in a solid result here early in the morning, 0.6. Shop down 5.7 now. just a horror show, these things associated with sales online. XLY is just so sick right now. Remember, I use this as a lead. I'll give it to you guys, XLY, XLP. It helps me understand whether it's risk on or risk off in the markets. And so far, it's been a horror show. Obviously, risk off hard. So right now, today is a little bit risk off, at least initially. But this helps you understand the American consumer, which is, of course, 1/3 of the US economy. And if Wall Street believes the American consumer is poor or something's wrong, they tend to bust that area, which is what they've done so far. But of course, if they feel like they're rich, then it's all good. And you get that nice movement up. And sometimes they go sideways for a while. And usually when they go sideways and the American consumer is not so good and defensive staples are similar, it usually means the market is at the end of the bull cycle. Okay. End of the bull cycle, end of the bull cycle. Just a little bit of a tip there. Blue Army says, hi, Tom. Is AGL still a buy during recession? We should keep commodity stocks. AGL is like a utility commodity. It's got some guy that purchased it on, for anyone that doesn't know, AGL is an Australian stock. It's been a horror show for a long time, and it's just kind of floating around now. Look, I've got it in distribution. I mean, I do follow this stock, obviously, as you know. Could have made a little bit of max pain the other day. Got like a little downward trend on this. I think it's still okay. But it has some guy that purchased over the top, which always annoys me. So, yeah. But this is just a utility. It's not a huge winner or anything like that. Just more defensive. So, thanks, Blue Army. But AGL was more of a last year, this start of this year stock when we talked about it. The one recently that was a bit better was probably Origin, which I know people of our private community got. And they've been in that one. So Origin was pretty okay, but it's right around here now. Tom, can you have a look at the 10-year? Yeah, 10-year looks weak, which is good. It's what we want from the 10-year. We'll finish up here in 1 minute. We'll just wait for this close to occur on the market, see how it ends up rallying. 10-year coming down, which is, again, theoretically good. As you know, I'm a bit bullish on treasuries at the moment. So, yeah, I want to see that 10-year down. 10-year down, guys. Oh, I haven't done the crypto. Yeah, Bitcoin. I mean, what can I say on the crypto? I can't really say much that you don't know. I mean, BTC short's coming down. Theoretically, that's good. So that's good for Bitcoin to solidify itself here. It is weakening still. My big demand zones in the future are pretty much sitting pretty low. So we've got like a 23 and a bit and an 18 kind of 20 zone. So you don't want to even hear about those. But look, we've hit the first one. We've pulled down. We've rallied up. Let's take a look at the daily here. So we've got some structure over the weekend now. Let's have a look at the 2 hour. So what I like with Bitcoin is that it does tend to structure through the lows. So if you think about other lows, it tends to do like a bit of a max pain, kind of forms that low, rallies a bit, creates a bit of structure, then has a nice boom. And if you go over further, you'll see it kind of sits around for a while. So I feel like Bitcoin's got to find its base. I think it'll be choppy trading in here, as in like it'll be a bit too choppy. This is a very important zone. So do not ignore this. There's a reason the market keeps stopping in the middle and shorting off. There's huge supply through here. So people are basically selling into this area, and they're selling early because they're freaked out. So in the future, you want to see it break through that 32. That'll be a big level for it. Big level. And I'll watch it structure up. So we'll come and we'll talk about this once it structures up. Let's have a look at Ethereum. Ethereum is actually super. You can tell it's just so much. All the alts are weaker. Where is a huge level for Ethereum? I'd expect it to have mass problems with 2400 in the future. Look, it can't even get to the last swing. Think about the difference. Bitcoin has almost got back to the swing once. Ethereum hasn't. It just shows you the demand in the main market versus the alts. Again, big demand zone. I'm not going to speculate on it until we see structure. I do know, though, that BTC shorts being reduced heavily here, which is a good sign. All right, have we got our close yet? Okay, no good on the close. Nothing cool on the close, unfortunately. We wanted a nice hammer. We got nothing. We just got some little small traders trying to rally that demand area. Oh, well, that's how it is. So you can see how we've got that level, why it's kind of done what it's done, and it's found some zones. Hopefully in the future, it keeps bouncing off this for you guys, and you see some kind of nice rejection off it. We're on half an hour into the market now, 32 minutes. So that means that the retail people have already dumped half of their earnings in. So unfortunately, that probably means the trap has been set for whatever they feel like. And yeah, this is a big area. And of course, never lose sight of filling in that gap at 39.20. Remember, load up your spies, load up your markets. You can see here that big gap range. And I am wary of the big gap just in case. So I'm looking for, more. I want higher probability, and I get higher probability when I bust these high and I have smiley face then, or I see rallies off this area here. And you can see why it's structuring around here. Even the real market, look at this, resistance, supports, futures market all over there. So yeah, under here, through. If you're waiting, you look for this area to be demanded. And if it is demanded, then you hope it breaks here. And if it does break here, you expect a pullback. And if you've waited patiently, you can grab the pullback wherever that might be, or you can take the break. And then the next zone, 41.5. All right, guys, good luck today. Thank you so much. If you haven't already subscribed, appreciate everybody that came here. John Moore says, I just bought. Wish me luck. Good luck, John. Kevin says, no gap. Fair enough. Hey, I hope so too. I hope we can hold this little devil range here and get some smiley face for you guys. Because I know it's brutal out there, guys. Hey, we got our volume profile back. They activated me during the stream. Thank you, TradingView. Thank you. Praise. We're back, guys. We've got it. All right. So that's why that range is so big. Because on the visible, you can see there's huge amounts round. So if you're ever not sure where it is, this is how this can help you to define ranges. So it can help you. It's not everything, but you'll notice that 41.5, and as we zoom out more, 41.5 is the big one, yeah? So it can help you, the volume profile range. So if we scroll up here, I just know that here is a massive zone, but you're not going to find it because it didn't stay around there long enough necessarily to show you that. See, it won't show you that. So this one's clear. These ones are less clear. And I think that's where you can really get a lot of good analysis from this. So one day I will eventually start creating these series and going through it. So yeah, that's why you get that kind of zone. And then that makes sense because if you get a rally, then it comes up into this zone. You know it's still a short market, even though you might say, okay, well, I think I found the bottom. Sure, you may have found the bottom. But when it rallies, you've got to expect shorting off these areas. And right now, of course, we're doing battle with the demand zone early in the piece here. Which, I think clap to you guys. Because at least you've found something that makes sense, yeah? And you're like, what is that? Yeah, I see that. Those sneaky people. All right, good luck today. Do not trade wheat. Do not trade wheat. Do not trade wheat. The aliens, remember, they come and they crop dust you. In all seriousness, soft commodities, dangerous markets out there, guys. Be careful. Never roll. It's terrifying. See you for the live video tomorrow. And thank you very much for watching. Bye for now.